I want to talk about my latest ES Strangle. Last week I actually entered 3 Strangles on the ES, closed 2, and what I was really playing is the spikes in the VIX. I was trying to, as the VIX would go up, I would sell Strangles, and as it come back down, I would just scalp my way out of them. Ended up holding this one over the weekend, which was fine. This is the last one I entered. I entered it at when the ES was trading at about 39.69, which is right in this level. I didn't look a lot at the chart simply because I was trading the VIX as opposed to what the ES was actually doing. But if you look at the chart, you can tell where you're getting kind of extended down into these Bollinger Bands, and this hit this Keltner channel right here, and we've broken below the 50 and heading towards support at the 200. So all of these things would make you think that perhaps over the next few days the VIX would consolidate in this candle range or even turn back up, which is what it did. Now, as I'm watching it today, and this is not really part of the trade I closed, but it does appear that it is showing some more weakness into this channel, so we'll have to see how it responds there. I would still expect it to level out and consolidate. Another thing, if you look at when I entered this trade, you can see that we were oversold on the 2 and the 5 time frame. And both these things will make you think as you look at this chart that it's going to consolidate, which is what I want. I want it to consolidate or to go up because both of those things would drop the VIX, and really the VIX is what I was playing. So let's take a look at the VIX. Zoom in on this chart. And what you can see is here on the 24th, which is here, the VIX had spiked up into this area. And I entered it when the VIX was actually at about 22.33, which was right here. Great time to enter it. You can see it was over a lot of these support levels. I typically put alerts at 21, 22, 23. Those are potential entry points for me. It spiked up right here. Again, I was traded this a couple of times this week. So this was the third trade. This is the one on Friday. So I traded all of these spikes. This was the one on a Friday that I traded. And, of course, it spiked up. It still extended. We're on the 2. We're over. We were overbought on both the 2 and the 5, and even that's a pretty good spike up on the 14 here. So all these things will make you think the VIX may consolidate, which it did, and that's how I got in and out of the other 2 trades, and also why I entered this one. Coming into yesterday, which I closed this trade on the I closed this trade on the 27th. So coming into Monday, you see the VIX just drop right here. And that's when I got out of this trade. It came back to this, into the mean area, and the price on my Strangle dropped, and I was able to get out of it. Let's take a look at the actual trade sheet. This is the trade sheet. Let you you can ignore what's up here in yellow. Right now, since I'm just scalping these, I'm really not using this, and I'm also not using these rules because I'm just scalping. And right here it says stay close to 45 days. Actually, they should say between 45 to 60 days. I prefer that. When I first started these, I was staying closer to the 45. But now I've kind of gone 45 to 60. I don't mind pushing into the 60 range. You see, I entered 3 contracts here. The way I do it is $10,000 per contract on my buying power. It's actually less than that, so my return is better. But if it should go against you, this buying power number will go up. That's why I use 10,000. That way I don't overtrade and I have enough room to make changes. The VIX went from 22.33 to 21.05, which is why I was able to get out of this for the profit. Got in at 11.25. Monday morning I started closing at 9.50. That was the first contract I closed. I had a good profit over the weekend, so I wanted to make sure I got out of at least one contract. And then I put in a 9.25 for the second contract, which was what my initial close was I was shooting for. And then I went ahead and did a 9 for the final contract so that I have an average of 9.25. So overall, I got about a 1% return on the amount of money that I risked, but I did it over 3 days. So it's about 111% return, annualized return. So this was a good trade. I'm pretty happy with it. It performed like I expected it to, which is always a plus. Let me know if you have any questions or like to know more about these trades. Please subscribe to the channel and like this video. Comments are always welcome. And let me know if anything I can do for you. Thanks.